Now, in its fight to rein in soaring prices in the world's largest economy, the U.S. Central Bank has hiked interest rates by 75 points for the third consecutive time now. The Federal Reserve announced that it was lifting the target range to 3 to 3.25%. The Federal Chairman Jerome Powell says that the rate rises were necessary to avoid a long-term damage to the economy.
Today, the FOMC raised its policy interest rate by 0.75 of a percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Powell further signaled that there will be additional large increases in the future as well to combat inflation that remains at a 40-year high.
So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And, you know, that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place.
Wall Street stocks tumbled and the dollar rallied on Wednesday after the Federal Reserve's announcement. The rate hikes this year have had their biggest impact on the housing sector, slowing sales and also bringing prices a bit lower. So for more on this, our correspondent Susan Tehrani has sent us this report from New York. Listen in.
The U.S. dollar hovers at a 20-year high as the Federal Reserve announced a third consecutive interest rate hikes, signaling that borrowing will remain expensive for some time. The news also came on Wednesday following an address by Russian President Vladimir Putin, who said that the country's armed forces would call up the reservists immediately to support the invasion of Ukraine. The U.S. dollar is widely perceived as being a haven currency during times of geopolitical uncertainty and economic stress. And while analysts said that the dollar will remain firm in the short term, they refrain from making any predictions regarding long-term stability, at least for now. Susan Tehrani reporting from New York for WION. World is One.
WION is now available in your country. Download the app now. Get all the news on the move.